Good morning, traders. Welcome to the live stream. My name is Charles. I'm from a community called Piratetraders where we are focused on the ES, the NQ, and how they move through the two-way auction process. I'm here today on Bookmap's channel to try to give you some insights to carry forward in your trading if you trade the S&P 500 or the NASDAQ. All right, so let's jump right in. If you have any questions, please let me know in the chat. If you are watching from the Discord, Bookmap's Discord, you can leave questions on the tab that says Futures/Charles, and I will get to your questions there. All right, well, a lot of people are panicked this morning. There's been a lot of talk on Twitter about Black Monday. I just want to tell you guys, when you open up your Twitter in the morning and you start to see bearish after bearish after bearish after bearish call, you can assume the market is probably going to go sideways or higher that day and not go down. If everyone is convinced the market is going to crash, that's when it doesn't crash. Instead, it bounces. Okay, so that's just a little food for thought to plant in your mind if everyone is so bearish. But why is everyone so bearish? Well, because we had a massive down day on Friday, and it was a true, real sell-off. The market just continued to push lower, bring in volume, push lower, bring in volume, bring in volume, bring in volume, all the way until the end of the day when we closed basically at the low, having left behind a very poor low, meaning the market wants to continue lower. So it makes sense that people are feeling bearish because the market made a very bearish move on Friday. And so that gets people feeling bearish. But I just want to give you a little bit of context to maybe not be quite so freaked out this morning. We look at the market, as I said, as an auction process. That means one of two things is happening. Either the market is in balance, it's going sideways, which means neither side is really in control. The buyers aren't in control, the sellers aren't in control. They're both just kind of making their bets, getting their position, trying to see what the market will do. But it is really more of like a tug of war between the buyers and sellers. No one is in charge. And then we have times where the market has momentum. Momentum means one side is beating the other side. So for example, and I'm sorry if this looks a little messy, but just stick with me here. From the lows down here, where the market was balancing for two or 3 days, the market created momentum up. The buyers were continually beating the sellers the whole way up. We just kept squeezing sellers, bringing in more buyers, squeezing sellers, bringing in more buyers the whole way. That is what we call momentum. All right. Another thing that we get sometimes is a market that is in balance, which is where it is just going down and then up and then down and then up and then down and then up and then down. When a market is in balance, it is never unusual or particularly bearish to move to the lower end of balance. That just means the market is looking to see what will happen when it gets there. It doesn't mean the market needs to keep going lower. Now, I've drawn this white box here on the chart, which is my best way of kind of explaining what this balance area has been that we've been in for the last few weeks. Okay. Yes, we went below the balance area low, but for less than a day. And then we turned around and came right back up. Yes, we went below the balance area low for less than a day, but then we turned around and came back up. Again, less than a day, came back up, less than a day, came back up. Okay. So yes, we poked below that balance area low yesterday, but as we have already confirmed a bunch of times in the past, doesn't mean we have to keep going lower the next day. We could easily just turn around and head right back up for that upper end of balance. So this morning, when I'm looking at the chart, I am feeling completely neutral. I'm saying to myself, maybe we really are about to make a massive move to the downside. Maybe this is going to be a Black Monday. But there is just as good of a chance that the market is going to turn around and head right back up to that balance area high. There is equal probability of that happening this morning. So as a trader, I don't want to be forced into trades one way or the other. I don't want to feel like when that opening bell rings, I have to get long because I don't think we're going to have a sell-off today, or I have to get short because I think we're going to crash and burn. I want to say to myself, what can I do today so that whenever one of those two things happens, whether it is the rotation back up to the opposite end of balance or it is continuation of the momentum lower. How do I manage myself today so that whenever that next big move happens, I'm in the trade for that move, right? That's what I want to think about. Not trying to predict what the market is going to do ahead of time, but merely make my plan for how I'm going to handle whatever the market does. Whether it goes up or down today, I have a plan. I know how to handle it. I see opportunities to take trades. Okay. So as far as that plan is concerned, here's how I see things. Right now, looking at the overnight range, it seems to me, since the overnight did nothing but balance all weekend long, that is probably going to continue. That this morning, the first move down or the first move up won't necessarily indicate that bigger picture today we are going down or up. Probably we're going to spend a lot of time going sideways. Okay, we're going to just chop around inside this range. But I know that if we gain momentum to the downside, it is very bearish. And if we gain momentum to the upside, it is very bullish. So the levels that I will be watching, I'm going to ignore, this was part of Friday's trades. I'm just going to ignore that. I'm going to be watching this low as the overnight low. That is 60.32. Okay. And I'm going to be watching this high right here at around 60.70 as the overnight high. And I'm going to assume between those two, the market is going sideways. It's going to chop around. If I wanted to take trades, that's how I'd be trading it. I'd be assuming it's going to chop around. Once it gets above Friday's high, so once it gets above 60.68, if I start to see new buying up there, I want to be going long up there because we left a lot of weakness behind, single prints, weak references inside of yesterday's range. All of that increases the odds that if we can just get a little bit of momentum to the upside today, we can make a big move. We can head all the way up to 61.12. Okay, no problem, because we have weakness that needs to be repaired. So if I see that momentum, if I see that new buying above the overnight high, I'm going to assume we're making that big move to the upside. That's where I want to get long, is buying support at the overnight high. Okay, now let's say it gets above that overnight high and it can't turn it into support. That's where I want to go short. Okay, so the overnight high is the very important level to be paying attention to, because if we get to it and we get buying, we're going higher, at the very least to 82, if not up to 61.02. Okay, and if we can't get that new buying and we pull back into the overnight range, well, now I know we're either heading for the overnight low or maybe even way lower. So that's a great place to get short. And I'd say the same thing at the overnight low. Now, the difference between the overnight low and the overnight high is I would not be as interested in a look below and fail of the overnight low as I would be a look above and fail of the overnight high. So like I said, if it got above the overnight high and came back in, I would be happy to short it once it came back in. But if it pokes below the overnight low and comes back in, I would not want to long that. Okay? Because there is momentum to the downside. The fact that we closed right near the lows and we left behind such a poor low means that this market has a higher chance of going lower than higher. So if we got to the overnight low and we got resistance, you better believe I'd be happy to short there, but I wouldn't long on a look below and fail. I would just assume we're going to get more chop and I would just wait for more information. Okay. Any questions on any of that from the chat? Good morning to Jay. Thank God it's Monday. DNK in the house. Griff is here. Good morning to you. Steven is here. Kevin in the house. Argentino, good morning to you. Billy K. Danny G. Sajad. RK. DNK says futures open at 6 p.m. Eastern on Sunday. That's just what I call the weekend. So the end of the day on Friday and Sunday, it's all just the weekend or just the overnight. It's all the same to me. James, good morning to you. DNK says his prediction is that we get a look above and fail of 60.70. So he's looking for us to get to that overnight high, not be able to turn it into support, and then fail and pull back in. If it happens, it happens. Just the reason that I'm emphasizing not to be overly bearish today is because we are in balance. And once you test the balance area low, the higher probability is that you're actually going up to the balance area high. Okay. So we have two, opposite pieces of information. Momentum down, which is, the closing at the lows with the poor low is a sign of momentum down, but also the fact that when in balance, momentum doesn't matter. Balance matters more. And so that would imply we're going to go up today. So if you're looking for the market to go lower, a look above and fail is the best way to get into the trade, because the market tried to go up and couldn't. That's when you can trust it is definitely going to go much lower. Trevor in the house, good morning to you. No questions on any of my analysis. Okay, we got a question here from Leon. He says, good morning. Do you take into account the behavior of the assets in similar months or other years? Or do you look at the current graph? Yeah, no, I just always look at the current chart. Here's the thing. I just saw one the other day on Friday where somebody found what happened on Friday, which was an options expiry day. The exact same thing happened at the exact same auctions expiry in February, like 3 years ago. And so they were like comparing the two charts. Look at this, like this. But it's like, well, what about 2 years ago or a year ago? You know what I'm saying? So it's like, sure, you can find correlations. You can find things that have happened at the same time as they've happened in the past, but you can't count on that every time. You can't say what's the options expiry in the middle of February every single year and expect the market to have a sell-off, because it happens sometimes and it doesn't happen other times. But if every day, no matter what day it is, no matter what's happened in the market the day before, no matter what happened a year ago at this time, no matter what macro events are taking place, if you just always ask yourself at this moment today, who's in charge, the buyers or the sellers? That will give you good insights every year. You know what I mean? So that's one of those things that's worth mentioning is just because something has happened in the past does not mean it's going to happen in the future. So what you want to, when you're learning to trade and you're looking for ways to enter trades, you want to use data that is always consistent, no matter what day of the week it is, no matter what week of the month, no matter what month of the year, no matter who's president, no matter blah, 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 the data is always the same and it is always of equal value. And measuring the buyers and the sellers, the momentum, that is always the same no matter why we have the momentum, no matter when we get the momentum. Momentum always reads the same. So what I'm talking about here with using the overnight high, overnight low, that'll work no matter what day of the week it is, no matter what's been happening prior. If this market wants to go up today, it will first get above the overnight high and find support. If it can't, the probabilities favor a move lower. It's really that simple. And that's why I only use information that I can use every day, no matter what the market is doing. Because, one of the hardest parts about being a trader or an investor is noise, right? There's just so much noise. There is so much unnecessary information out there being flung at you every minute of every day. Every time you log into social media, every time you turn on CNBC, every time you try to connect with the world of finance, you're going to get tons of different opinions, tons of different stats that are all going to tell you different things. Some of them will work sometimes and not work other times, and vice versa, and it will drive you mad. It is just so much noise. And it's really hard to consistently make money if you're paying attention to all the noise. What you want to do, if you're looking for consistency, not looking to get rich quick, you're looking to show up every day, day in and day out, and churn a profit. What you want to look at is the purest information you can. So first off, nobody's opinion. Take everyone else out of the mix. You are the only one whose opinion matters, right? Forget every other voice, because even if that voice is coming from a genius, it can still be wrong and then do you wrong. You know what I'm saying? So the first thing, quiet all the noise, ignore everyone else. You read data. You focus on the market generated information. What do you see? How can you take trades based on what you see in the charts? Start with that. And then when you're choosing, what information am I going to look at? Do I want to look at a Bollinger Band, or do I want to look at a moving average? Do I want to look at, order flow, or do I want to look at volume profile? Do I want to look at this or that or the other, right? Find the purest one. That's what you should be asking yourself, is what is the purest data that I can get? Not data that's manipulated slightly to make it easier for me to understand. What is the purest data that I can look at? And when you do that, I promise you, you will come to the same conclusion that I have, which is price action. Where does the market go? How much time does it spend there? And how much volume does it bring in there? If you can learn to understand those basic concepts, it doesn't matter what day of the week it is. It doesn't matter what happened this time 3 years ago. All that matters is what's happening right here on the chart, and it will be the same every day. Price will move to a new level. It'll bring in new buyers or sellers, and it'll keep going, or it won't bring in new buyers and sellers, and then it'll reverse and come back. And once you get rid of all that noise, reading the basic information becomes a lot easier. Will is here. Good morning to you. Abu in the house. Welcome, welcome. Grizzly Bull is here. Any other questions? Let's take a quick look at the NQ. I mean, I assume it's doing the exact same thing as the ES, but we will just take a quick look and see if there's any nuances we can pick up. Yes, so a subtle difference between the NQ and the ES is that this is the previous balance area for the NQ. What did the ES do on Friday? It sold off all the way to the opposite end of balance, right? So that's why I say we have to be neutral this morning, because from that opposite end of balance, it can turn around and head right back up. No problem. But the NQ just entered their previous balance area. They did not rotate to the opposite end. So I would describe myself as more bearish on the NQ than the ES, because the probabilities actually favor another move to the downside today. Now the NQ, just like the ES, is giving us a beautiful 45-degree angle on the overnight high. So if this market is going to go lower, it should not get above the overnight high. It should get resistance, and it keeps poking, getting resistance, getting resistance, getting resistance. If you keep seeing that resistance, you can get bearish for the move lower. If it is able to get above the overnight high, the odds of a look above and fail are less so, and the odds that we're going to rotate back up are higher. Okay. So again, looking for support above the overnight high to go long, and assuming that if it's able to get up there, it probably will find support. But otherwise, I'd be bearish. So on the ES, I am neutral, needing more information. On the NQ, I am bearish as long as we stay below the overnight low. The last thing I wanted to mention this morning is when I'm zoomed out here, it's starting to change a little bit right now. But this morning when I first looked at it, when I'm zoomed out here looking at the contracts that are currently in the order book. So basically we got these large nodes up here, and then we got these nodes down here. This to me reads like balance. This to me reads like a sideways day. Now, of course, the second the opening bell rings, this all changes. That's the thing about order flow. It changes constantly. But as of now, this is reading like a choppy sideways morning. So that is the last thing I wanted to mention. It's reading like the bots are in control. Shopping bots. DNK says, I assume he wrote this before I started talking. He says, can we take a look at the NQ? Makes me think lower is more likely. By the way, I trade ES, but got into futures with NQ, so I have a habit of using it as a confirmation bias for the ES. NQ, I think, will go to 21,560. Yeah, we've talked about this in the past. I don't like using correlations between ES and NQ to make decisions about trades, just because I tried it in the past, and there'd be times where the NQ would be pumping a certain direction, and the ES be going sideways, and I'd think like, okay, I can buy the ES to catch up with the NQ or whatever, or short the NQ because the ES isn't going anywhere, and it never seems to work out. So I don't look at them correlated in a way that's tradable. But yes, if one is doing something, the other will probably be doing it too. And it has been especially so as of late. Good morning, Nap. Griff says, what is the difference between balance on a weekly and balance on a daily? It's a great question. So reading it is exactly the same in terms of like what you look at on the chart. It's identical, which is just a range, right? It's just being in a range, but weekly balance, lasts. This seems like such a stupid thing to say, but weekly balance lasts a lot longer than daily balance. So if we look at the daily chart right now, to me, this is a balancing area on the daily. And then we broke out of that balance. When we came back to back test it, we could not turn it into support. So we rotated back to the opposite end, right? That's daily balance. But the market has been balancing for months in this range over here. So if you were reading my daily emails last week, this whole time I was talking about how we broke out of balance on the daily, but we had not broken out of balance on the weekly or the monthly. And so if we zoom out and we look at the candles for those, so we'll switch from daily to weekly candles, you can very clearly see it. Ignore these white boxes now because they're for the daily. As a matter of fact, let me turn those off. Okay. Well, now what do you see on the weekly? It's been in a range. Look at that right there. For 1, 2, 3, 4, 5, 6 weeks, it's been going sideways inside a range. So that's weekly balance versus daily balance. It's still a box, right? It's still a range that the market gets to a high, runs out of steam, makes a low, runs out of steam, comes back up. It's still the same story in terms of what balance is, but it's just slightly different ranges. And weekly balance tends to last a lot longer than daily balance. You may only be in balance on the daily for 2 days, and then you make your next move. Whereas if you're in balance on the weekly, you're probably going to be in balance for a very long period of time. And if I were to change this from weekly to monthly, look at that, in balance, just like that. Okay. So one nuance that I think it's too early to make this call right now, but if on the daily today, the market were to continue lower, we were to get below yesterday's low, below Friday's low. Okay. We could say we're heading to the weekly balance area low, which is just slightly lower. That weekly balance area low is down here around, 5,890, around this area. So if we got below, right here, we could look for a move to here and then look for a move to here. But again, no reason to be looking for a move lower this week when today the market could go up. So let's take it one tick at a time and see what the market gives us. 3 minutes to market opens. Any other questions? Demo Trader says there's no stream on the Discord. I didn't turn on my screen. My bad. They can hear me. They just can't see me. There we go. Any other questions? DNK says, yeah, I look for bias. If both are going one direction, it gives me more confidence it will trend. I agree. And if they're both on a precipice of breaking too. So if both markets are like right at a balance area high or a balance area low, and they both break one way or the other, that gives you a lot more confidence. And if they don't, if one starts to break lower while one is breaking higher, that's more reason for caution. All right, the market is open. We are in a chop zone. So we are looking for resistance above between 60.55 and 60.63 to send the market back down. And we are looking for support below around, the first one is 44. If we don't get a bounce there, we're looking for a move down to 34. Looking for support there. And we just figure out which way it breaks. And then we know which way we're going. Because it's a chop zone. All right, so what do we see on Bookmap? They're adding liquidity both above and below price. They want to push it up, then they want to pull it right back down. Looks like chop. Zach says, forget about slow mode. When do you normally feel the most confident about the day's forecast? What type of trading day? It's not a type of day thing. It's so at the start of every day, I'll come up with a scenario in my mind for what I think is going to happen that day, right? A most likely thing to happen, middle of the ground thing or a least likely thing to happen. So for example, today, I think the least likely thing is that we go sideways down here in the lower end of the range all day and go nowhere. That to me is not going to happen. We are either going to turn around and head higher or we are going to break and head lower. I don't think we're going nowhere all day. Now, is it impossible? Of course not. It is absolutely possible we go nowhere all day. But the market is just in such a position. There's so many people panicked from Friday. There's so many people short the market right now that if it doesn't keep going down, it inevitably will go up because they will cover those shorts, right? So it's not about, is today a trending day or is it a balancing day? It's not, are we opening with a gap or are we opening inside the previous day's range? It's once we start to see what the market's doing, is it doing what I expect? And the more it does what I expect, the more confident I feel. So there are days where there might be a gap up and I am absolutely certain the market is going to fill that gap. If the market comes down and immediately fills that gap, I feel much more confident that it's going to be a gap and go day and that I can trust the momentum up. Whereas even if it doesn't fill the gap, if it just grinds and grinds and grinds and goes through the opening price 20 times, I might not feel as bullish. Now, one, the market filled the gap, which should be less bullish. And one, the market stayed around the opening price, which should be more bullish. But it's about what I perceive as what is going to happen and then what actually happens. When it's doing what I expect, it's much easier to have confidence. As far as a personal preference, I do prefer trading trend days than trading rotational days. Because the thing about trends is, it's not that hard to tell when they're coming to an end, right? Sometimes it's a little tricky to tell when the trend is starting, in the very beginning. But once you know you have momentum, all you have to do is get in a trade in the direction of the momentum and then just spend the rest of the day asking yourself, when will this momentum run out? And if you're early, if you think the momentum is running out and you take profits on your trade, who cares? It's profits, right? So maybe you left a little on the table. And you could have made a bit more if you let it go further, but who cares? You still made money. Whereas on balancing days, there's complete uncertainty. It could change at any moment. It could start to gain momentum one way or another. So you have to really be in focus and every decision has to be the right decision, whereas with momentum, you just got to get one decision right, get in a trade in the direction of the momentum. So I prefer momentum, but that doesn't mean I don't trade on balance days. It just means I'm more cautious. Inside the chop zone. Oh, getting corrected on my my reading of the chat here. I kind of like that. He says, Zach asked about type, not time. Yeah. So in terms of time of day, no. I mean, most of my training is in the mornings, but I'll trade in the afternoon. If it's clear, if I understand what the market is doing, I'll trade in the afternoon. But yeah, generally I would say between like 10 a.m. and noon is probably when I have the most clarity of the market. Once we get to like noon, it starts to get much more choppy and harder to read. And usually by that point, I've already locked in whatever gains I'm going to get for the day anyway. So I just call it quits. Okay, so that 45-degree angle on the two overnight ranges is acting as resistance. This is the moment of truth where we find out, is that resistance going to take us to new lower lows today? Or is it just the beginning of chop, right? So now we're near the lower end of the overnight range. So we're looking for support here between 60.42 and 60.34. If we get a bounce, we assume more chop, more sideways, more grind. If we don't, things start to get bearish and we look for resistance. Kirk says, since Friday was a double distribution lower, shouldn't today we expect lower prices? Again, everything is contextual. So yes, and it wasn't even a double distribution. It was like a quadruple distribution to the downside yesterday is bearish. And especially the fact that we closed at the low like that is bearish. And also the fact that it was a poor low is bearish. All of that is bearish. But it doesn't guarantee us we're going to make a lower low today because of where contextually we are opening, which is at a balance area low. So anytime a market is moving, let's go back to the daily. Anytime a market is moving from one end of balance to another, that is all that we think about is happening. So the move from here to here is not bullish. It's just a bounce to the other end of balance. The move from here to here is not bearish. It's just a move to the opposite end and vice versa, right? Why would we want to think that way? Well, because really the market went nowhere for 2 weeks straight. It went up, wasn't really bullish, so it came back down, wasn't really bearish, so it went back up and vice versa. I'm saying that is still true right here. That because we're opening right at the lower end of the balance area, it doesn't necessarily mean the market is bearish. Bigger picture, it may have just moved very quickly to that opposite end, but now it's going to turn around and head right back up. Of course, if we get new selling today, this morning, well then yes, we want to get very bearish. And people that were in my stream, you know, those of you that are in the brigade, go back and replay Friday's stream. We were up here when I said we're heading to the lower end of balance today because we'd re-entered and we were getting new selling and we had momentum. I was shocked. I was like, I can't believe this is going to happen, but we're going to get a move to the opposite end of balance because it's just not that unusual to move straight from one end to the other in a single day. It's just not unusual. We do it all the time. And I'm also saying it's not bearish. It's just a move to the opposite end. You have to watch these things happen again and again and again and again before it finally clicks for your brain to just not get overly bullish or overly bearish when the market is in balance. It's just balancing. That's what it's doing. Zach says, I screwed up on Friday and accidentally left my long position open. I've flipped it since the CME opened last night and have been short since. Yeah, I have a hard rule. I never enter a trade without a stop because I've had that happen to me too. I've also accidentally left orders in the order books and not realized it. That one's pretty bad too. So like, for example, you know, you're thinking, I want to buy support down here or whatever. The market closes up here. You forget you left that order there. And then you wake up the next morning with a massive gap down and you're short. That shit is very painful. So I have a hard rule. Whenever I enter a trade, I also add a stop and I never walk away from my computer without having those orders in. And when I swing trade, I use options. Sorik says, will you define a poor low? Yeah, so I just must very briefly, and I apologize to everybody that's heard me do this lecture a million times, I just must very briefly explain the auction process in order to explain a poor low. So we think about the market as a competition between buyers and sellers. The most obvious example of that is an art auction, right? Where people are competing to buy a piece of art. So how does it work? The auctioneer, he starts lifting the bid. I have 1,100. Do I have 12? Do I have 12? Do I have 13? 13? Do I have 14? As long as there's still volume, as long as there's still people putting their hands up in the air wanting to bid, the bid will keep going higher, right? It'll just keep going and going and going and going until you run out of people, until it's down to just 2 people left willing to bid. And then he'll go back and forth between those 2 people on that very thin volume until there's only 1 person left willing to bid. And then boom, sold to that person for whatever that price is. Okay. The stock market works like that, except there's an unlimited number of shares that can trade hands or contracts or whatever. So it's almost like every time you sell a painting, you bring out an identical painting and start the auction again. So the auction goes 2 directions. It goes up and down. So one thing that we as traders are always looking for is this auction over? Are we done going up? Has that last person that's willing to bid? Has that last person that's willing to do business done business? A poor low is a sign we are not finished doing business to the downside. It implies that there are likely people willing to do business if the market comes back to this low. And in this case, because of stops, right? So if you were buying in the J period or the K period or the M period, and you were buying these lows, where were you probably putting your stop? Below there, somewhere below there. So now when the market opens up here, it knows there's liquidity down here. It knows if it can just poke down below yesterday's low, it can get a bunch of contracts to change hands. That's like a magnet that pulls on price. So anytime we leave behind a poor low, the market is likely to come back to it again. Now, it's not a guarantee. All the time we leave poor lows and don't come back for them, but it just slightly increases the odds that we will come back to it. Okay. Because there's liquidity waiting down there. Oops. And so you say to me, well, Charles, if you know you got a poor low, if you know you got liquidity down there, why not just go short right now? Go short and put your take profit at the previous day's low. Well, that trade has a decent probability of working. However, what the market does is if everyone does that, if everyone starts shorting right away at the market open to go down there and repair that poor low, guess what the market does first? First, it pokes up to take out all their stops, all the new shorts, then it comes back for that low. Okay, so that's why even if we have a target, sometimes we have to wait and give the market some time and let it chop around. Let it squeeze some people both directions first, then we get the move. And that patience is just absolutely pivotal to being able to consistently have profits. Is the not forcing trades just because there's a potential opportunity, but wait until that potential opportunity is so good you can't pass it up, which, as we discussed, would be a look above and fail of the overnight high. Okay, so last chance for the buyers here. They got to get a bounce and they got to get back up through the opening price if they want to reverse this momentum to the upside. At this point, the more time and the more volume we bring in below the opening price, the more likely we're coming back for yesterday's low. Can the buyers reverse it? Right here, right now. Let's find out. We got a question here. So the fact that we have liquidity down there tells you we are heading there? Not necessarily. So the thing about liquidity is it serves two purposes. Sometimes it serves to act as a magnet pulling price to it. Sometimes it pushes price away first and then it pulls price to it. So if you're talking about the liquidity that is hidden here, which is stops, which we can't see, all I'm saying is if we don't bounce right now, yes, we're coming for those stops. Okay. As far as this liquidity, which is longs sitting in the order book down here at 30 and 35, that liquidity doesn't really mean much because right now market is trying to poke down there and get at it, but it could just as easily push away and then this disappears. So liquidity never guarantees that the market will move to the liquidity, but that is where the market always wants to go. The way I describe it is think about the market like it's an animal that's just hungry. And what does it eat? Orders. That's it. It doesn't care if they're long. It doesn't care if they're short. It doesn't care if it's a new order or if you're getting out of an old order. It doesn't care if it's a stop or if it's, a limit order that's sitting in the order books. The market doesn't care. It's just hungry and it wants to go to wherever it has to go to get the most orders to change hands. Okay, so here's an example. They got down here and a lot of those orders spoofed at the last minute. So now the market might think, well, fuck it, we're not coming for these because they're just going to spoof again. And so it turns around and starts heading back up. Yeah, I'd say that's the only pertinent level right now is 30. So then as the market turns around and starts going back up, what happens to liquidity at 30? Look, it's getting darker. They're trying to add more. They're like, come on, market. One more little poke down to 30. They're trying. Now it's getting dark red. John Q says, we never seem to have time to wait to make a trade, but we always have time to sit around the day regretting why we didn't wait on our trades. Laugh out loud. Yeah, that's the way it goes. There's an actual cognitive biases. I can't remember what it is off the top of my head, but there's an actual cognitive biases that explains it. I think it's called the action bias. Yeah, the action bias. And it's like, we just want to do something. Like our brains, we're sitting in front of the computer. We want to make money. We know we have to push buttons to make money. We just want to push buttons. We just want to enter trades. But then you do, and then you get stopped out, and then you're like, oh, fuck, why did I enter that trade there? And then you spend the next 3 hours feeling shitty about it instead of just being like, why didn't I wait a little bit longer to enter the trade? Why didn't I wait until it was confirmed? Okay, so as far as the chop zone goes, we are now breaking below the lows of the chop zone, in my opinion. So I've got this level marked right here at 60.35. If 35 starts to become resistance, if previous support starts to become resistance, that's when you start shorting. And the target, the first one is the repair of the poor low from yesterday. Okay. So now we have repaired the poor low from yesterday. We have taken away that magnet that was pulling on price. And for the record, we did not get any kind of liquidation here. So we didn't take out very many stops. So now the question is, as I said, does the overnight low become resistance? Because we are either going to just poke below yesterday's low and reverse because we didn't get a liquidation here, or we're going to start to get new sellers, which is a sign this thing is going much, much lower. As it would mean we still have momentum to the downside. Can they hold 60.35 as resistance? Okay, new selling below yesterday's low. This is bearish to see. It increases the odds that we still have momentum to the downside. The first major target to the downside is this weak reference at 6,300, at 6,003. That is the first major target to the downside. We do have some support here, so I don't think we're going to go in a straight line down to that reference. But as long as we stay below 35, the higher probability is that we're heading to 6,000. Okay, so again, a little support here around 16. Wouldn't be surprised to see a bounce. Okay, so we're right at support. We're getting a little bounce, but what did we just create? A poor low. B period reversing right at the A period low. So just like we talked about with yesterday, the push away from the poor low is probably just a place to look for sellers to come back and take it out. Okay? Because there are now stops, the people going long right now at this moment. Their stops are below that A period low. They're below 16. So we got a poor low, increasing the odds. This momentum is going to continue to the downside. But first, a bounce. James asking about the market profile chart. It's a company called Window Trader. Window spelled without a W at the end. Kiwi says, nice stream. Well, you're welcome, Kiwi. Appreciate you saying so. If you guys are interested, you can watch these streams with me every morning for just $20 a month. Join the Pirate Traders Brigade. There's a link at the top of the screen, piratetraders.io/join. And then you join the club. CJ says, the profile on the left of the screen from what time frame? How many days? So the way I split out my profiles is just the regular trading hours. So that's from 9:30 a.m. to 4 p.m. I use those exact hours. And then the overnight, which is everything from 4 p.m. one day to 9:30 the next day. So what you're seeing over here in the light blue, this actually represents the whole weekend's trade. And then the stuff over here that you kind of can't see because it's off screen now, that was Friday's trade. And what you're looking at right here is the current day's trade. So since market open this morning. And it's reading like momentum to the downside, which is bearish. Because remember, this is a breakout of balance, the balance area, on the daily. So if we are not going to reverse and head back up, it means we need more of a pullback in price. We got to put the market even more on sale to find those discount shoppers. We just don't have them here anymore. And that's very bearish to see on both time frames, intraday today and in the days going forward. For the week, it's bearish. Okay, so now that we're back to our target to the downside, this week reference that we left behind at 6,003, I want to go back to a conversation that we started at the beginning of the day where somebody brought up the idea of, if there's momentum down, why not just short right at the market open? Why not just instantly get short? Because at that moment, when the market opened in here, either thing could have happened. The market could have turned around and head higher today, or it could have headed lower. Knowing for sure what it's going to do at that market open, that is very, very hard to know. But seeing resistance at the overnight low, or seeing resistance at the previous day's low, and then taking a trade to the target to the downside, that move has a very high probability of working, of making money. Now, you would have had to have sat and watched the market grind up in here first. You would have had to have done nothing. But I promise you, in your career, you will make more money off of this trade over and over and over again with a high probability than you will off of guessing and being in this trade right here. Okay? And that's the trick to trading with the auction process. It's not about guessing. It's about waiting until the market tells you, oh yeah, we've got momentum to the downside. Then saying, where is the high probability location for the market to go? And then taking the trade. It's a smaller distance. It's less points, but there's just as much money to be made if you trade with more contracts, which you can do because you have more confidence. I hope you all found this helpful. If you did, you might consider joining the brigade. Piratetraders.io/join. We'd love to have you. And we'll talk about these concepts every day. I will give you these opportunities and help you to learn to think like a trader who's not gambling, but using probabilities and analysis of those probabilities to give them the best entries for trades. All right, so now what am I expecting for the rest of the day? Well, I'm bearish, straight up. No two ways about it. We are breaking out of balance on the daily. That is very bearish. So I am assuming that the momentum is going to continue to the downside. At this point, I would want to see them stay below yesterday's low to keep that momentum going. So if they come back up, we want to see yesterday's low hold as resistance for the next leg to the downside. If they start to drift back up into yesterday's range, into Friday's range, that will be the sign that we probably made the low for the day. And that we're probably just going sideways for the rest of the day from there. But as of now, this reads as bearish. This is a break lower. We have momentum, and it will shock you how far they can push it when they have the momentum. So let's see what the sellers get today. With that, I will say goodbye. Wish you all the very best. If you are not a member of the brigade, head on over and watch Bruce's stream. If you are a member of the brigade, let's set sail. We'll see you in the private stream in about 2 minutes. Thanks a lot. Bye.